Hey guys, so it's been a while since we checked in on Bitcoin. You know what I'm going to do is I'm going to remove all the tools. That's weird. Why is it not here? Remove all drawing tools. That's so weird. It's always there. Here we go. That's so strange. Why is it here, but not on the daily? Oh, now it's here. Okay, so things are not looking that great, right? I mean, you can look at all the indicators you want, but if we just focus on price action and volume alone, we're seeing, well, first of all, obviously the bear market for the past many months and weeks, but recently we're seeing um, this dump, and this is kind of, before it was like, yeah, we're in a downtrend, and it was clear that we were in a downtrend, but now it's like we're not just in a downtrend, we've broken down from a downtrend, right? Like this was the critical support zone that the bulls were looking for. And after that, honestly, I remember the day that this closed. We closed at like 5-6 or something, and I was like, I don't know what I was thinking at the time, why I thought that we might just hold support and go up. Like it was so clear in hindsight that we were coming down at the very least to 5,000, if not, of course, all the way down to where we are now. But well, there you go. I guess missed that trade. And now the only question is, do we have a high probability of a small reversal? And by that I mean, not just like 20%. The thing is, a small reversal at this point would be 30% bounce, right, to 4,000. Well, let's just be more accurate. 4,200. That's what the bulls are hoping for right now. You can't be a bull and saying, "Oh, well, I'm hoping or I'm targeting, 6,000, within the next few days or even, well, a week, okay, maybe a week or two. But then if it's a week or two, you're targeting like a V-shaped reaction. So that's not going to happen, right? So at best 30%, and now everyone's looking at the 3,000 level, right? Everyone's looking at it. So what I'm wondering is, there's three possibilities. One is that we come close to it and bounce off. One is that we touch the level, and one is that we, have a wick coming down to like 2.8 or so, or maybe even 2.7, and then come back up. I'm looking at those three options because I think it's extremely unlikely that we come down any further, at least on the daily time frame within the next, few days. Well, when I say extremely likely, to put in probabilities, I'd say it's like 80% chance that we're gonna bottom out maximum at like 2,700 before we get and high probability I think would be 2,850, right? If we come down to 2.8, it's like, well, that's looking dodgy, and then I mean, like even here you can see that there's like a kind of resistance. So here that's 2,930. Yeah, not exactly at 2,850, but that's like kind of like a safe margin from a level. Let's see, from the 3,000 level to 2,850, like 5%, 6%. But the reason I don't think we're going to come down even further is just by how notable this support line is, right? So it's all very nice to draw in support lines here and there, but the fact of the matter is some of them will be significant, like orders of magnitude more relevant than others. Okay. So one example is possibly this one. Like if you compare this trend line, okay, just to be more accurate, we'll actually leave this here because the day closed over here. So we have a touchdown, almost another one, 2, 3. We'll call that just one. So 3, 4. 4 touchdowns, and then finally a breakthrough. And that's super significant. Here we have 1, 2, right? So we touched the third time. It was a small bounce, and we came down. And similarly here, although we haven't had we've only had 1 touchdown on it. We've had 2 forms of resistance breaking out, coming back, holding support. And to be fair, theoretically, this would be the best entry point, right? Because we've established the resistance twice here on the way up. We've broken through it, and now it's like, well, it's an established resistance, it should hold its support. So it does a fair bit of the time. But then the next time you come down, the theory goes on to say that, well, now it's formed resistance. Okay, we broke through it, held a support, but now if we come to touch it again, it's like, well, this was supposed to be support. This was supposed to be a level off of which we don't really come back to anytime soon. And if we do come back to it, then the question is asked, well, how strong is this support? Because we're coming close to it again, right? So theoretically, this would actually be a weaker form of support than if you had have entered at this point over here. That being said, the downtrend has been, exponential. I mean, we came down exponentially over here, and now again we're coming down in this line, which is not sustainable for the bears. Okay, first of all, we have a 85% dump from the top, which is significant. I haven't looked at the biggest bear markets in the past, but I think this is actually one of the worst in terms of how far we came down, although maybe in 2012 or something we came down 90%. But I mean, even 90%, that's 2,000, right? So, it's like, it's very hard to not say that, we're near the bottom here, assuming you believe in the long-term viability of Bitcoin, right? From the fundamental perspective, not from technical analysis. Assuming you believe that, this is a really exciting time, because no, we're not necessarily at the bottom. No, there's no signs of reversal yet, but long-term, it's just extremely unlikely that the market went up so high that now it has to come down like 95%. I mean, it would be pretty extraordinary even for Bitcoin. So we're really looking at 90% as being very high probability of being not surpassing this, but of course an even higher probability. Like if I had to put right now the probability of Bitcoin touching down at 3,000 zone and then bouncing back up again, in other words, never breaking, let's say 2,800, not even like closing through it, I would say that's like maybe 55, 60, no, let's say 60%. And the reason I'm making these percentages is not to like try and say, hey, this is the answer, but I think it's a great experiment experience in trying to estimate probabilities, because that is what you're doing all the time here. And it also, back from my poker days, it feels like a good, solid, rational thing to do. So about 65%, but then breaking like 1,800, I can just see here, actually, it's a pretty notable zone level as well. Breaking this level, right? I'm going to say that, I mean, based on my experience so far, like about a year of looking at charts and trading is like, well, I've only really been trading 6 months, but besides the point, I would guess, I would estimate it to be like 90%, maybe that's pushing it, 85% probability, but probably closer to 90. So that makes it very interesting as a bull, because as an investor, to be more specific, even if you enter at this level right here and you say, well, okay, I'm 85% sure that we're not going to break this support, and long term, you believe in the market, right? So the only reason to sell would be if it's going, if it's absolutely going mental, or if it's already gone up a hell of a lot, like but the thing is here that, look, let's just say you're a medium term bull and you say, well, I expect we'll come back to touch resistance at 6,000, okay? Like there, you're going to have a 2.21 risk reward ratio, for which you only need to be, I don't know exactly what the number is, probably about 40% sure. But you're like 85% sure for this trade, right? So that's kind of like a no-brainer for the short term. But then if you say, well, I'm doing this as an investment and I'm going to cut my losses short over here, well, then it becomes more interesting, because you're literally just going to be holding until there's a sort of confirmed trend reversal, so like we saw here. So after this high, we had a breakdown, move higher, and then the second breakdown, or in any case, certainly after we broke this level, 10,000, you'd be out at that kind of level. And but ideally, of course, you try to get out a little bit more before before it crashes. So, but in any case, let's say you're looking just at 20,000, which is the next super clear resistance. This is where it starts going crazy, because there it's like 13-to-1 risk to reward ratio. I mean, look at that. You're risking 43%, which is a lot, to be fair, to get 561%. So let's say you have a 100K folio, like it's pretty intense what you're risking. You're risking like 43K, and that's a pretty big risk. And actually, that's one of the reasons why I'm being more nuanced in my trading. But I'm in terms of creating stop losses and not risking that much. But I think it's great to look at this from the bigger perspective, which is like, even if you take that bigger risk, the risk to reward is so big, and it's like, if you think there's like a 50% chance that Bitcoin will survive and thrive for the next 5 to 10 years, even just 50% chance, or let's say even just 5 years, like this would be a pretty amazing risk to reward. Okay, so that's kind of the big picture I'm seeing on the daily on Bitcoin. But then the other thing I want to clarify is this channel. Well, it's not really a channel, but I'm going to draw it here in channel lines just to make it clear. What I mean is this. Okay, so we had this sort of whole move coming down over here. Okay, it was brutal over here. Look, let's just draw this kind of zone of where the price was, okay, bouncing between. So we bounced here within this zone. So unless it's, a complete scam, it's basically never going to just continually come down. That's not sustainable. This type of move is not sustainable long term, just as in this type of move, not sustainable long term, right? So when you have these kind of brutal moves down, you're always expecting a brutal move back up. And if we just look at the percentage difference, it'll probably be bigger here than it is for the current move. Let's just see 70%. Yeah, and 50%. And that's normal because we just came off of a massive bull run. But the fact that we're in a bear market and now we've dropped 50% in a 33-day period, so that's like 5-6 weeks. Okay, that's pretty huge. That's like, well, okay, we can go down maybe 65, 70%, but 70%, really? Like, we're going to drop 70% in just this small period? Like, maybe, but that seems like the absolute end zone, right, for the bears to take down this market. Personally, I mean, that would assume that this would go on. Well, of course, it could go up and then bounce, but that's pretty much what we're saying, is that this is likely to bounce before it reaches this level, even, because this would mean that we just continually come down, not only as hard as we did after a bull run, after this, ridiculous bull run, which was just waiting for a big dump. Now we're in a bear market already going down, so we're waiting for it to go down. We're expecting that, but we're not expecting like a huge, massive dump again, as if, before people were buying like crazy, so now the market has to correct. No, it's not that. Now it's just fear and panic, and that's what's driving it down. So it's like, that can only last so long, pretty much. So I'm expecting, I'm going to be entering some very large positions around the 3,000 level. And of course, I will have to stop loss out of the majority of that if we break about 2,800. That's my kind of plan for if that happens within the next few days, okay? Assuming RSI levels are still as they are now. But then certainly, like, I'll be entering again based on price action. But the general thing I'm postulating is that very, very high probability that we break out of this red zone bullish. Whether we come down and break out of it is, of course, another thing to be is another thing. But I think that the fact that we have the support here means that there's a very good chance that we do break out before we touch this. And actually, if you go here, well, we'll do this on the 4 hour. Let's just finish this video for the daily analysis. Oh, and of course, I mean, if you look at the price action, sorry, the RSI and other stuff, then of course there's a whole bunch of other things to talk about. But let's just finish this with just pure price action and basic trend lines and trend zones as we have here. So the other thing, of course, the other things to look for is volume. So we had a lot of volume coming down. The volume was negligible for weeks, months, and months, and then we had this big boom over here. Okay, and now it's like we have this big volume coming down. And it's hard. It's been pretty erratic. You had this big, huge spike over here, came down hard, just in terms of volume up here, like come down. But in general, right, the general idea is that this volume is a fair bit higher than the average volume of the past few weeks. And I guess you can see that much more easily on the weekly chart. Yeah, here it's very, very clear, right? We have this big volume coming down. So there's certainly momentum, but look, so far the volume has been slowing down a little bit. And if we look at the bars here, well, we have this bar, of course, is much longer and much higher volume than the previous one. Then we have an inside bar from which we break bearish, this time with less conviction than the big bar over there. And now we're touching on this week, 10th of December. So that gives us just 2 more days left for this week. So it's unlikely that we will have more volume. And yeah, I mean, on the weekly as well, you can see this clear support zone even more clearly than on the daily. And well, yeah, I just think it's going to be a pretty good play. And as an investor, like I'm just trading now, but as an investor, I'm quite tempted to start laddering into some long positions. Yeah.
I mean, that's guided. And when you actually take notes and take the time to